What happens when you see a large-scale supply-side decrease alongside a large-scale demand increase? Well, I think with Bitcoin, we're about to find out. Today, we're going to be discussing Bitcoin's growing illiquid supply. Now, this is referring to the amount of Bitcoin that's actually available on the network for new traders and investors to accumulate as much as they can. That amount is decreasing substantially. Here we're on the Bitcoin hodl waves chart on lookintobitcoin.com, and we can see here by this beautifully colored rainbow chart, these are the percentage of age bands that have been holding Bitcoin for a certain period of time. For example, this dark purpley colored shaded area here is representing the amount of Bitcoin that has been held on wallets for at least 10 years. And this continues to grow and is about 5.5% as I film this. But if we just remove the lower age band shading, so for example, everything beneath the 3-month chart, we can see here that the amount of Bitcoin that's actually available to trade for those that are wanting to trade on a more frequent basis, are trying to play the intracycle swings and are taking positions more frequently than every 3 months. This has climbed to above 80%. Now, this is a very, very large amount of Bitcoin that is just sitting, not doing anything. And at first, this might not sound like a positive thing, but if you just imagine the amount of capital inflows that would be required to exponentially increase the market cap of Bitcoin when only a small percentage of BTC is available for purchase, that capital inflow requirement decreases substantially. And what we can also see, especially if we remove that 3 to 6 month band, that this is increasing notably and has been for a sustained period of time. Even when looking at age bands of 6 months and above, this metric has almost hit 80%, Bitcoin's highest value of percentile dormant BTC. And again, we can just remove that 6 to 12 months and look at the 1+ year, which is the same as the 1 year hodl wave. And again, we can see this has grown to nearly 70% and continues to grow. Now, this is, again, like we said, pretty bullish for BTC. But along with that, we can also use this metric to actually try and gauge when the market's getting maybe a little bit overheated. We can see here this is a quite cyclical metric. So we can see once Bitcoin starts moving quite exponentially to the upside in the latter stages of a bull cycle, we usually see these hodl waves start to decrease, meaning that a lot of new retail are coming into the space to potentially buy up, and unfortunately for them, their timing historically has been less than favorable, we'll say. Especially if we go to the realized cap hodl waves, which is showing not only these age bands entering the market, but at which price they're actually accumulating BTC and their impact on the realized price. We can see here by the same darker, warmer shades here, which is indicating the newer wallets getting into the space, that these tend to massively spike to the upside as Bitcoin price is topping out, showing us that not only are new wallets coming into the space getting in probably a little bit too late, but they're also buying it potentially too high. And the same is true for the downside. Once we see almost no retail interest, no new capital inflows into the space, and lots of people holding their BTC because they believe in the opportunity cost, they think that the risk to reward right now doesn't make sense for selling, and they're holding for higher prices in future cycles. This typically occurs right at market bottoms. Also keep in mind that this illiquid supply growing is also happening alongside some potentially huge fundamental factors that are going to radically impact the potential price appreciation of Bitcoin. As we're seeing multiple ETFs being submitted, and these are spot ETFs which would require 1-to-1 holdings of all BTC on these ETFs with underlying real BTC, not just derivatives, not just something that's mimicking the price of BTC. These are spot ETFs, especially this one by BlackRock, the world's largest asset manager, which has filed for an ETF for a spot BTC ETF. That's hopefully going to get approved potentially in the next few weeks or months. We don't really know, and there is of course the chance that it will not get approved. But imagine the capital inflows when BlackRock, the largest asset manager in the world, begin distributing these ETFs and need to accumulate real underlying spot BTC just to allow their creation. Another thing to consider is if we just look at the stats of BTC, we can see the circulating supply is 19.5 million, and there will only ever be 21 million Bitcoin ever in circulation. There'll never be more than that ever exists. So that's over 90% of BTC that'll ever exist are already in circulation, and near 80% of them haven't been moved in a year. Over 80% of them haven't been moved in 6 months. This is such a small amount of BTC available for new investors. And how could we discuss the growing illiquid supply of BTC without mentioning the upcoming halving event, which is going to decrease the inflation rate of BTC by 50%. So we have a number of different catalysts giving us confluence. A potential increase in demand from spot ETFs that require real underlying BTC to fund them. We have a halving event, which is going to decrease the supply of new Bitcoin coming into the space by 50%. And the amount of BTC that hasn't been moved in extended periods of time is on a sustained uptrend, meaning there's less and less available for new investors to actually accumulate. I'll let you come to your own conclusion on how you think this may impact the Bitcoin price. Also, if you haven't already, don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, the amount of real BTC that is currently liquid on the Bitcoin network has by most metrics never been lower in percentage terms. And this is also occurring while a number of spot Bitcoin ETFs are being processed that will certainly increase demand substantially if/when approved. And we're also having a halving event taking place in less than a year, probably around April or March, maybe even May 2024. Either way, not too far away, which will result in the inflationary rate of Bitcoin decreasing by 50%. Also, all of this is occurring while over 90% of all BTC that will ever exist are already in circulation. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the potential incoming supply shock we're going to see in Bitcoin, alongside maybe a large-scale increase in demand. How do you think that'll impact the Bitcoin price? As I said, let me know down in the comments down below and on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.